and every transaction would flow through Hedera. So it's a combination of the Hedera consensus service as well as the tokenization service, and it would end up being many millions of transactions per day at scale. So it's a big deal. It's a big deal for Hedera. It's a big deal for the industry.
Absolutely, and I can understand if they were blindsided. So as you understand, Brandon, Drop is a micropayment platform, an extremely cost-effective platform that was built on Hedera Hashgraph's distributed ledger. But we also use regulated banking technology to make this payment platform happen, right? So that you can make payments in Web3 digital currencies, and you can also make payments in fiat, specifically currently US dollar, USD, right? So what's happening in the world in general, and some part of our vision is driven by the global emergence of real-time payments by the banking industry. In Brazil, you have PIX. In India, they have UPI, which has become very, very popular and become de facto standard there. And in the United States, we have two instant payment rails. One is called RTP by the clearinghouse, and the second one we just got introduced is a Fednow, and everyone is excited about it. And I can see why the community is excited about it. So we Drop as a payment platform, we offer instant payments. So, and I've mentioned this several times on your show, that we've been working with the financial institutions, specifically banks, to enable RTP. We have shared our product with the clearinghouse, which has had real-time payments since 2017. And then we also shared our platform with the Fed, specifically the Fednow team in March. And it's a slow process, it's a long process, and they were excited about it. The product looks really good. So let me just tell you what the issue is with all these real-time payment infrastructure all over the world. They're incredibly fast. They do real-time settlement of fiat currencies, but they're just rails. You need all the payment capability. You need the user experience. You need all of that stuff to make payments happen. So when you do digital shopping or you do any shopping, all of that experience that you have and all of the experience that the merchant has, that has to be all built. So we built all of that so that you could have real-time payments. So we've been in conversation with banks to enable RTP and then now to enable Fednow. And we were fortunate enough in March, in the month of March, when we showed the product, the Fednow team liked it and they said, we would like to showcase your product, which happened, I think, last week. We wanted to make an announcement once we are live with that product as opposed to just being showcased in it. And I think one of the Hedera community members saw it and got wildly excited. We are very excited. I think this is the future. The future is instant payments, and you should be able to make the payments, whether it's digital currency or you want to make it using US dollar or any currency, you should be able to do that.
In the particular products, I know that there's a lot of new things that you're working on. Some things that you'd like to share with us.
Sure. Today, I think we have announced one more product, which helps the latest technology, blockchain technologies, with these open ledger technologies. We are already, it's just out for the last few months, I guess, with one of the companies called Ripple. And we have already partnered with them, and we have a working product in which we have demoed it here. And we are going to demo that to a lot of our customers as well. And we are getting a lot of good traction there, saying customers have looked at it, and they're saying this is great because it's when they're thinking about these things, when we show the solution, they really love it.
You know, very interesting for me because, of course, as you mentioned, blockchain is getting a lot of coverage, and I think a lot of people still associate it very much with Bitcoin and cryptocurrencies, and that might not have given the right image of blockchain. So it's really refreshing to hear that there's other applications in financial services and that you've actually brought some of that into the market. I'd like to hear a little bit more.
Again, you're absolutely right, because blockchain has been associated with Bitcoin. A lot of people have not been looking at other things, but I think now the knowledge of blockchain technology is becoming a little more popular, and people are learning more on how it can be used, right from the securities market to the payments market, the settlements and all that. I think as we go forward, again, there will be a lot of excitement regarding that, and there will be a lot of new players, and eventually there will be shake-up, and then some of the leading players will settle down as the leading leaders. But what we are trying to do is, it really doesn't matter which vendor you go with, which technologies we go with. Our architecture itself is built in such a way that we are
There may be another downgrade coming for the banking industry. Fitch is warning it may be forced to cut the credit rating of dozens of banks, including big ones like J.P. Morgan. This will matter if it does raise the cost of borrowing for the institutions. Of course, you know, debt and deposits are the raw material for what banks produce, right? So is there any evidence that might be the case?
Well, I think, you know, you would have, obviously the markets are a dynamic thing. I mean, Moody's, cut 10 banks last week, and Morgan Stanley analysts basically pointed out they believe that the borrowing costs for the downgraded banks would increase, and there's even a risk that some of the banks could get locked out of debt markets overall. If you increase the cost of debt issuance, what does that do? That basically increases the pressure on their profit margins, and that's one of the big stories of the year. I think it's important to point out two things. The reasons, the factors that would potentially push Fitch to do this would be, credit normalization. If commercial credit, obviously we're talking about office loans, if it's worse than they expect, if that normalization is actually worse than they expect, then they would have to look at that. And if the Fed actually has to keep rates higher for longer, then that's something that they would have to look at as a trigger for these potential downgrades.